If you've been watching my channel, which hopefully you are a subscriber, thanks for subscribing, but you know since the summer, I've been talking about the tech startup bubble burst, and it seems like other people are talking about it. A trending topic on LinkedIn right now is that investors are still iffy about stock. Now, Amazon and Google had an increase in stock the past week, going up 11%, but according to Wall Street Journal, most tech investors are still skittish about the tech sector and industry in general. Despite getting hammered of late, they still aren't convinced that these stocks are cheap. And data suggests that inflation may be easing a bit, but it's too soon to know if this will be the bottom for tech. And I totally agree. It was really easy to get funding for startups since 2014 or 2015. A lot of that is because a lot of the famous startups like Lyft and Airbnb grew quickly despite not initially turning any profit. I believe that Twitter, it might not be the same startup as Lyft, but Twitter hasn't been turning a profit for a long time. There's a lot of zombie companies. They are companies that are still running and functioning, but not actually turning a profit. And after COVID, we saw a ton of hype in the industry with both investments and the tech sector in general. There was a lot of hot trending topics, like obviously crypto was huge over the past 2 years, but also the stock market had one of the biggest bull runs in history, and it seemed like anywhere investments could be made, it worked out. I mean, even look at NFTs. People were making huge amounts of money just by flipping NFTs on the market. E-commerce saw so much growth in 2020. I know, I work for an e-com company. And also the housing market. Houses became more expensive than ever in history, and now we're starting to see things that change. That housing prices across the nation are starting to dip. E-com is starting to show some drops in profit. Crypto seems to be completely crashing. Now, that's kind of dramatic to say. I do like crypto myself, but I mean, FTX has billions of dollars held up in their exchange because of some mishandling of money. We see BlockFi is also shaking in their boots, and Solana has completely crashed as a coin. Only a year ago, people were really putting big bets on Solana. So things are changing, and I think it has to do with the tech startup bubble burst. And I still don't think that we've reached the bottom. There was a lot of hype around this stuff, and it's totally normal for humans to kind of gather around really popular subjects or industries or investments, but we are just now starting to see the dip. As we go into holiday, most businesses do slow down, so it's not expected to see a lot of profit or even hiring. Me, the recruiter, I care about those things, but we have next spring to really see how things play out. I don't think that layoffs are over. Now, maybe for the end of the year, they're going to slow down between Thanksgiving and Christmas. That's just logical. Any company that's going to pay you to not work during the holidays, they have some sort of investment to keep you there. Otherwise, they would let you go before Thanksgiving, like Twitter and Meta did. But I don't think we are at the beaten down bottom of levels for things like housing prices, stock value, crypto, even online marketplaces, the e-commerce industry. We still have a lot more to go, and I think that next year is going to continue to be a tough year. Most consumers have been very well aware of inflation. You can certainly see it on your grocery bill, but you haven't been seeing it really in stocks, housing, or crypto. Well, that means that we have a little bit of time to see those things play out. Typically, it takes about 6 months to a year, maybe even 2 years to really see the bottom of the housing market, and stocks in the housing market really ride together very closely. So I don't think we're going to see a normal or a bottom until at least the end of next year. And there's a lot of changes coming up that are going to change the employment industry. AI and robotics has been really popular for starting startups, or a popular subject in general. I see tons of entry-level people asking how to get into the AI industry. There's not really an AI industry, it's more like AI jobs within the tech industry. But we are going to have a year next year of companies trying to cut the expenses and increase profit. So I think that there's a high chance that certain jobs will be automated with AI. For example, there's already technology out there that can script JavaScript with AI robotics. I think that AI will definitely enhance advertisements. I could expect robotics to come into manufacturing, even Amazon with their warehouse workers. They're making little robotic arms that can do the separating for people. And that's going to hugely impact the employment market. We do need some of those lower level jobs, whether it's for people who don't have super high career ambitions, or maybe that they're younger and earlier in their career and they need that kind of job to stay afloat. Maybe they're even an older person that is so close to retirement they just want to take a less intellectually challenging job. I don't mean to insult anyone out there because I've never worked in one of these warehouses, but if a company can automate away your job with a robot, that means that there's an aspect of your job that isn't incredibly difficult. I also think that we are going to see more regulation in some of these areas that we've seen the huge earnings. For example, the housing market. First, we've seen a huge increase in homeowner insurance. I do think that there's going to be a lot more regulation around short-term rentals. We've seen that in cities like San Diego. I know that Atlanta passed new regulation during the recent election that limited the number of short-term rentals available. And I'm sorry, but if so many people are going to go on TikTok and talk about how rich they are, how they're not a wage cuck, and they can pay for their great lifestyle by being an Airbnb investor, well, everyone's going to figure it out, and there's going to start being less interest in that app. Plus, there's been a lot of controversy around Airbnb, like the hidden cameras, the weird attacks, the double the cost for room rental when you calculate in the cleaning fees. But it's not just short-term rental that is in danger with the real estate environment. I've seen a ton of home construction. Home construction numbers have really gone up, and looking back at history, anytime that there's been a housing crash, it's been accompanied by a quick increase in building houses. Also, there's going to be more costs when it comes to being a landlord. I've already seen regulations pass or up for proposal to have higher taxation on landlords, or more strict regulations that reduces the amount of profit available. For example, the amount of rent one can increase on their tenants per year. You already see that in big cities like in San Francisco, but as more and more people become aware how much of a monopoly some people have on the rental environment, well, you can't have a nation where the average one bedroom is $1,200 and people not find a way to stop that. That is a problem. You know, if you're an 18-year-old, your parents make you move out at 18, you can't afford a $1,200 one bedroom. So either you're splitting that with someone and you're living in the living room, or you're having to get a small room with many other roommates in another house. Anyone that's been a young person in a large city knows exactly what that looks like. And if the whole nation has to live like that, people are going to fight against it and find a problem with it. But it's not just housing that is going to be affected. Obviously, crypto is falling from its little castle. Everyone likes crypto. I like crypto, but you gotta admit that it's a little bit of a Ponzi scheme. And in 2020 to 2021, we saw a ton of new crypto exchanges coming up. There's even one called Upstart that I just heard about, but FTX really made a name in 2020. BlockFi really made a name over the past 2 years. And now one of them is missing $1 billion and the other won't let you move your assets off the website. Those are just examples. I even think I heard that Binance was going to acquire FTX, but then they changed their mind. That's a bad sign. It's not just crypto, too. Stocks have been incredibly overvalued. I think people got really accustomed to some of these unprofitable companies or unreasonably highly priced stocks making other people millionaires. They just really got used to these unrealistic prices being realistic. I was saying it back in 2021, before I was more active on this channel, but I was saying back then that this is unrealistic and people are living in this fantasy world. Even for me, it was hard to accept what I was saying because logically I know it's just unrealistic for some of these stock prices to be so high, but then I was seeing everyone else making tons of money off of these unrealistically high stocks. Well, now reality is going to come in. I don't think we're at the bottom for most of the major tech stocks, especially companies like Meta. Social media, it seems like it's on the out. Now, TikTok is a unique social media forum because it's really focused on delivering you content. You just swipe through. Whereas websites like Twitter, if you don't follow anyone on Twitter, you have to go to the main homepage and look at like the generic news. But with TikTok, you don't have to necessarily follow someone to have a really customized feed. So I think that more of the legacy social medias like Facebook and TikTok are going to kind of crash in popularity. So will their stocks, so will their salaries. Now, this is obviously something relevant to anyone watching my channel, the employment industry in tech. A good rule of thumb, if you see stock prices crashing and you see that tech companies are having a hard time getting investments, well, there's a high chance that your salary will not grow as quickly as it would have 1 or 2 years before. I'm already hearing like horror stories of people who have Ivy League degrees and Fortune 500 internships not being able to get any job offers or unpaid internships even for some of them. And that's not a myth, that is a real thing happening. I would expect people who have become accustomed to inflated salaries at FAANG companies, as these FAANG companies stop having as much profit or investment, I could expect that their salaries will either stay stagnant or simply just not grow as fast as they are used to. And it is going to be a shocker for a lot of people in the industry. I do suspect, based on both my own experience and numbers, that the younger people in the industry are the ones that are going to be the most shocked by the reduced growth in their salaries. Totally understandable. They don't have any experience in the industry, but anyone I talk to that has over 10 to 15 years of experience, they don't want to leave their job. They're not pushing for super high salaries and they're not demanding remote. There's a reason. They know that the economy is falling and they know that they lose that leverage to negotiate higher salaries or better packages when the market is more plentiful with good candidates. And that's what happens when people get laid off. The candidate market becomes more full. The tech talent shortage is now a myth officially. When you have 11,000 meta engineers getting laid off, okay, so it wasn't all engineers. It was about 46% of the people laid off were engineers. So let's say, to be generous, 5,000 engineers from Meta are back on the market. All right, then you have a lot of good engineers on the candidate market. So it's not really a place where a subpar candidate or even an entry-level person has a lot of leverage to negotiate higher salaries. I had an entry-level candidate try to negotiate up a salary by $30K with me, and essentially the COO of my company laughed it off and immediately rejected. And anyone in the industry could expect the social aspect of their job to become more relevant. People who have kind of problem personalities are going to struggle more to get a job because the reputation will likely follow through the industry. People will figure out that they're difficult people to work with. Sorry about that. But generally speaking, too, don't forget we have wars going on across the globe that are going to affect the industry. Not only the upcoming presidential election next year, which will certainly impact highly political companies, but shipping and logistics should also get in the way of company growth. The recession experience in America is not exclusive to America. We are going through a global recession. Home prices in Australia are now below COVID prices. So they're pre-COVID prices already. Australia has the most inflated housing market, so that's definitely a sign, but you can definitely see in Europe that they're recognizing the oncoming recession. So this is not an exclusive American problem. And likely this is the first downturn in the tech industry a lot of people in the tech industry have ever seen. It could be equated to the downturn seen in 07-08 or 2000 to 2001. Well, a lot of people in the industry now weren't even in the workforce during those times. So this is the first time they've seen a downturn. There's plenty of opportunity and room for them to not believe and not prepare. If you're watching my channel, I'm trying to prepare you for this, to change your mindset so you don't become one of those people that was too late to decide to see the truth. But the truth is that this is the first quarter downfall for tech and most companies, but it's certainly not the last. I would expect the next 2 quarters to also produce some sort of downturn as both companies keep laying off, profits keep dropping, and the public in general realizes that there is a recession, so they're less likely to spend money. When you look at the layoff videos that I have posted, I have a whole playlist about it, A lot of the layoffs are coming from companies that are vendors. They're offering services to business in a B2B type of situation. Well, that's a sign that the companies are not purchasing these services anymore. So that's the first sign of what the American consumer will act like moving forward. Essentially, what happened over the last 2 years was easy money, hype technologies, crowds of people, government stimulus, economic shifts made things look super overvalued. Well, now the cards are falling, and it took a lot more than just one quarter for these cards to stack up. It took a lot more than just one quarter for the housing prices to become so expensive, for the stock bull market to become so high, and for crypto to become so overvalued. I would suspect it took a solid 3 to 4 quarters for those things to happen. I personally said in late 2020, early 2021, I thought the housing crash was going to happen last spring. Clearly, I was wrong. It's going to come this spring. So that means my guess was a 1 year off. I would guess that we have 1 year until the tech industry kind of sizzles out. There's a lot less movement. But this could be a good time to start a business when big companies are distracted by trying to reduce their costs, increase their profits, and while really good candidates are on the job market. These meta engineers are likely laid off with great severance packages, so they don't need to rush to go get a new job. So there is a chance it's a good time to start a business as long as you don't need significant investment. I wouldn't say now's the time to start your Series A startup that needs $10 million to get going. Now would be a good time to start a company that maybe you could fund with your own private investment, your own savings, or if you can get a very small amount of investment with a very large amount of proof that the investment would be good, then yeah, now could be a good time to start a company. But generally speaking, we are now in the startup tech bubble burst. So everyone put on your seatbelts. Make sure to subscribe to my channel so that you can be the most up to date at what's happening. And if you are on the job search or looking for a new job, this is definitely a good place to get good tips and find a way to get the kind of job that you could have gotten 2 years ago. Thanks for watching this video and subscribing to my channel. I'll see you in the next one.